Good morning, everyone. TradePie is here once again with another trade review on Nasdaq Futures. This is the trade that I have done yesterday on Monday, 19th of May, and I would like to share my analysis and what was going on my brain and my mind during this trade. So, with, without any hesitation, we jump into the daily chart, and as you can see, over here we have the daily chart. The level I like to mention in the daily chart is this daily fair value gap, that is a type of BC. And when we drop into the lower chart, we will see the business and the more detail around this level over here. This is very important to me because we have traded up and we cleared the buy side liquidity resting above this swing highs over here, and we kept going higher. And last week we had on the Friday and Thursday we had very indecisive candles. So once we jump into the 15-minute chart, 1 hour chart, we will see the on the hourly chart. I highlighted this low that is happened on 15th of May, that is last Thursday, the daily low on Thursday. I projected this to the right side. You can see that over here we have a quite big new week opening gap, and I highlighted the consequent encouragement of that in yellow, as well as the opening range gap that I highlighted over here. When we jump in the lower time frame, you can see. So now we go to the 15-minute chart, and you can see the sell side liquidity from Thursday is also coupled with this swing low on the Asian sessions, end of the Asian sessions, and they created a relative equal lows over here. The market has traded up, failed to reach to the low of the new week opening gap, and then start selling off. And you can see the market had two legs over here trying to reach to the consequent encouragement of the daily fair value gap that is in dotted line over here. You can see the market was spending a little bit time over here above the consequent encouragement of the daily inefficiency, and after that we had a quite nice run to this 15-minute inefficiency that is type of BCB. And when we jump to the lower time frame in 5-minute chart, you can see over here these 2-3 candles that they have equal highs over here. So they created the equal highs and kind of buy side liquidity over here to me. So once we traded lower and we jumped to this daily consequent encouragement, daily inefficiency, and we also cleared the sell side liquidity from Thursday's low, I was quite sure that the market is trying going higher to reach to this relative equal highs on the 5-minute chart. And if we jump to the 1-minute chart, we can see the businesses and my notes from pre-market session trades. Uh, this is exactly the time the market had traded into the daily inefficiency consequent encouragement, and when it traded up and the next leg started going lower at 5 o'clock, this red candle is exactly the candle at 5 o'clock. I was pretty sure that they're not going to go below this low over here, and they have created the low of the day around here at 444 in this white candle. So when the market started going higher and cleared this swing high over here, we had a kind of shift in the market structure, and the market tried to reach to 15-minute CB that I showed in the previous slide. And by doing this, we cleared the minor buy side liquidity, and we took the orders from here as well as this 1-minute CB that is formed over here. And you can see the market then started going lower after not reaching the consequent encouragement of the 15-minute fair value gap. Then once it started going higher to these three candles over here are my breaker, because we have the high, low, and higher high. This down close candle over here especially is the breaker block that I used, but you have to consider that all of these three consecutive red candles are considered as the breaker block. So once the market traded above and entering to this 1 minute fair value gap, as well as hitting this level of the closing price of the breaker, I entered for going short, because I was quite sure that this 15-minute fair value gap is trying to send the price lower, and the objective that I could consider for this position was this red candle over here, that is my order block. So I entered in these candles, as you can see, at 21,165.64.5, and the market immediately started going lower and delivered to this red candle over here, that is my terminus. I exited from this position at 21,138 and a half. So after that, you can see it was quite very interesting exit, and you can see the market respected the upper portion of this order block, even though the wick went a little lower but didn't close the low of the order block, and the market started reacting to go higher. So in this slide, I'm showing you the businesses. As you can see, there is a sell at 21,164.50, the same price here. That is my entry. It's happening one tick above the close price of this breaker block, and the market is starting selling off to reaching this order block, and you can see the fill of the position is at 21,138 and a half, and then we had the run higher. If you notice, I put my cursor on this red arrow over here, so you can see the entry point exactly here, and in the picture on the right I put the cursor on the blue arrow over here to see the exit point on this position. After this, we go to the New York opening bell, and the market at after 9:30. I would like to show you that this big candle over here is the candle of 9:30, and the opening price I highlighted as a opening range gap low over here, and we have the settlement price or opening range gap high at 21,496 even. So we have quite big opening range gap, that is around 290 handles, and you can see from the beginning of the market, after opening bell, it started going higher. We were waiting for creation of the first presented fair value gap, and because this is my model, I wanted to start the position above this first presented fair value gap after its creation. But the market never came back to this level over here and just keep going higher and higher till reaching the new week opening gap low. The market was a little resting around this level as new week opening gaps low, and after that started going higher and higher again. So the bias to me was the consequent encouragement of the new week opening gap, as well as the consequent encouragement of the opening range gap. If you notice, these two levels are resting very close to each other, and they are going to act like a magnet that gravitate the price toward themselves. So from the beginning of the AM session, I knew that the bias is bullish, and the first objective to me was this consequent encouragement confluences. So when the market couldn't fill my position in the at the top of the first presented fair value gap, I decided to enter for another position going higher, because we are going very strong and sharply towards the consequent encouragement of new week opening gap, and we were spending some time over here, as you can see. Then in this 1 minute fair value gap, and you can see the entry point is exactly top of the 1 minute fair value gap. I entered for going long, and after spending some minutes over here, there is also in the macro time between 9:50 and 10:10, the market started rallying higher. If you notice over here, all the bodies of the candles are respecting the upper portion of the fair value gap over here, even though the shadows are permissible to go out of the fair value gap. But the important part is the bodies of the candles are resting inside and in the upper portion of the fair value gap. So all of these things are showing me the market is trying to reach higher prices. So I wasn't actually scared from any kind of drawdown that I had over here in these candles. But once the market started moving, you can see in two candles, I reached to my terminus at 21,399 and three quarter. That is just below the new week opening gap high, and it gave me around 42 handles for 850 almost worth of dollar. So the market spent a little time over here after creation this BC over here. We have 2-3 candles tapping into the high of this inefficiency, and after that we have another run going higher. And after this, when we broke this new week opening gaps high, to me the market had almost done most of the thing I was expecting, and the final destination for me for this AM session was the opening range gap high that is at 21,496, and I was spending a little time over here. I highlighted this inefficiency that is resting above the new week opening gap, and honestly over here I lost my sight, and I cannot say what happened exactly, but what I can say is I was acting totally impulsive, and it wasn't it wasn't me actually, the trader inside me. It was the character flaw that I have, and I was trying just to get a little portion of trade over here because I was expecting after this big run we have to have a kind of retracement at least to go lower below these lows over here that are almost equal. So I started going short on this candle, and you can see the market immediately went in profit, but after that started strolling up and hit my TP. And I don't know exactly how I can explain, but this is the part of the trading that I don't like because of myself, my weaknesses, and my flaws. It's a kind of over trading, you can say, or revenge trading. I consider these trades over here as a revenge trading, and you can see most of them are ending in the losses. Even though I was pretty good in the risk management skill, I could manage it. So by end of this portion over here, that is only consolidation, the market didn't start moving to any direction, just spending a lot of time over this new week opening gaps high and this fair value gap. Then the market started after 11:30 to go higher towards the opening range gap high over here. So after this run, I came back to the market. Of course, I wasn't in front of the chart for all this period over here. I came back to the market, and in the macro time between 11:50 to 12:10, there is a launch macro. When I saw this reaction from this inefficiency that is projected from the inefficiency after 10 a.m., I set the position over here for going long towards the opening range gap high, and I entered at 21,427 and a half. When the market started going a little higher in this candle, I trailed my stop loss to this to the high of this inefficiency that is formed on this candle over here. And you can see the market immediately came back to hit my stop loss in profit and spend a little bit time around the inefficiency over here, and then finally started going higher to clear the buy side liquidity over this swing high. And that was the trade review that I had on Monday 19th. And I hope you enjoyed this video. Thank you for watching this video, and do not forget to finger the like and subscribe buttons below. TradePie on YouTube is always here every day of the week with live streams, and if you like the content, please don't forget to support us. Happy trading and good luck.